All right, let's talk about something huge that's been happening, kind of under the radar. For the past few years, China has been doing something we haven't seen in modern history. They're directly linking gold back to their currency. Now, this isn't just about stockpiling a shiny metal, no way. This is the story of how China might be using gold to completely reshape the entire global financial system as we know it.
So it all kicks off with this massive, simple mystery. Why on earth is the People's Bank of China and its allies buying up physical gold at the fastest pace we have ever seen, and they're not even being quiet about it? So the big question is, what do they know that the rest of us don't? Well, to find the answer, we actually have to start somewhere else. It's not in China. It's really about this growing crisis of trust in the world's main currency, the good old US dollar. You see, for the first time in a long time, countries are actively looking for a different option.
And if you want to pinpoint the moment things really kicked into high gear, look no further than 2022. That's when the US froze about $300 billion of Russia's foreign reserves. Now that sent an absolute shockwave around the globe. It showed every other nation a pretty startling reality. If your money is held in dollars, it might not actually be your money. And you can see the ripple effect right here. I mean, for decades, the dollar was king, right? Countries held over 70% of their wealth in US assets. But look at this chart now. That share has plummeted to just 58%. That's its lowest level in decades. Nations are actively ditching US Treasuries and searching for something safer. So where are they putting that money? You guessed it, gold. And this chart just lays out China's strategy perfectly. For years, their gold purchases were pretty steady, almost flat. But then, right around the time the US started talking about tariffs, their public gold buying just explodes. It goes vertical. And get this, they aren't just buying it, they're making sure the whole world sees them doing it. And you know what? What they're showing us publicly is probably just the tip of the iceberg. Officially, China says they have around 2,300 tons of gold. But experts at places like Bloomberg and JP Morgan, they estimate the real number is way closer to 5,000 tons, once you count all the gold held by their state-owned banks. I mean, the sheer scale of this operation is just massive.
Okay, so this isn't just about hoarding a bunch of shiny rocks in a vault. Not at all. This is a full-blown master plan. China is literally building an entirely new financial system from the ground up, one that's designed to make gold a powerful, functional financial tool all over again. And a huge piece of this puzzle just fell into place, and honestly, almost nobody noticed. Under the international Basel III banking rules, gold got a major upgrade. It went from being a Tier 3 asset, where it only counted for 50% of its value on a bank's balance sheet, to a Tier 1 asset. This is a complete game changer. It means gold is now officially on the same level as cash or US Treasuries. It's considered 100% risk-free. But believe it or not, Tier 1 is just the beginning. The next big level is becoming what's called a high-quality liquid asset, or HQLA for short. Right now, only the absolute safest stuff, like US Treasuries, has this status. These are the pipes, the plumbing of the entire global financial system. They're the collateral used for trillions of dollars in lending every single day. If gold gets this status, well, countries could fund their entire economies without ever needing to touch a single US dollar. So, how is China trying to make this happen? They're building this thing they call the Gold Corridor with the BRICS nations. Brazil, Russia, India, China, and South Africa. And honestly, the best way to wrap your head around it is with this awesome analogy. Think of it like a Fred Flintstone chain of blockchain. It's an analog, physical system built on real-world trust. And this system is just brilliant because it fixes the three big problems that have always plagued the idea of a gold standard. First, the trust problem. They solve that with decentralized vaults. Each nation holds its own gold. Second, transparency. Every single bar is tracked by its serial number and purity. And third, volatility. This is so clever. Instead of using the jumpy daily price, they use a 200-day moving average, which smooths out all those crazy price swings. So, what does all this add up to? Well, this system basically builds a highway for China to become the world's new banker. It creates a pathway for developing nations to grow their economies completely outside of the Western financial system. Just imagine a country in Africa, for example. So many of them are incredibly rich in gold, but really poor in infrastructure. With this new system, they can take their physical gold, deposit it into a Shanghai Gold Exchange vault, and then China's new development bank can loan them yuan against that gold as collateral. All of a sudden, they can build roads, ports, power plants, all without ever needing a dollar from the IMF. So,
what could this do to the price of gold? Well, think about this. Right now, most major financial institutions hold about 20% of their reserves in hard assets, like gold. But new guidelines are now recommending that number should be closer to 30%. That single 10% shift applied across the entire global system represents an estimated $2 trillion of new demand for an asset that, you can't just print more of. And you can bet the US has noticed what's going on. While all this is happening, the United States has been very quietly moving its own gold out of vaults in London and bringing it back home. So why would they do that? Because in a world where physical custody is everything, holding your own gold becomes a critical strategic move.
Okay, so all of this is pushing us toward a moment unlike anything we've ever seen in modern history. We're talking about a great monetary competition, one that's setting the stage for two profoundly different futures for the very idea of money. It really breaks down like this. On one side, you've got the East, led by China. Their system is all about something physical, something ancient, gold. It's based on hard collateral and control. And on the other side, you have the West, led by the US. Their countermove could be built on their own strength, technology and math. A system built around digital assets, stablecoins, maybe even Bitcoin, all based on openness and programmable value. And this all leads us to one final, really profound thought. In the past, there was always just one global standard for money. But what if? What if that's all changing? For the first time in our lives, we might be entering a world where money becomes something that countries, and maybe even you and I, can actually choose.